Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're putting a clean, indicator-free strategy under the microscope. It's called the Session Open Drive Breakout, and it trades one of the most reliable rhythms in the market, the burst of direction that follows a major session open. There are no moving averages here, no oscillators, just pure price action anchored to the clock. By the end of this video, you'll understand exactly how it builds an opening range, how it spots the breakout, and how it manages risk. Let's dive in. So what exactly does the Session Open Drive Breakout do? At its heart, this is a pure price action strategy. It uses no indicators at all. There's no moving average, no relative strength index, no average true range. The entire edge comes from a single, classic intraday observation. When a major trading session opens, such as the London session at around 7 o'clock in the morning, the first handful of bars tend to carve out a tight little box of price, an opening range. The first decisive push out of that box often sets the directional drive for the rest of the session. This expert advisor is built to trade that idea mechanically. It's designed for intraday markets where session opens produce clean, directional moves. Think of foreign exchange majors like the euro versus the dollar, or the pound versus the dollar, or a stock index such as the US 30. It works best on intraday timeframes, somewhere between the 15-minute and the 1-hour chart, where the opening range is meaningful but not so small that noise dominates. Because every threshold in the strategy is expressed as a fraction of the range itself, rather than a fixed number of points, the logic is symbol agnostic and timeframe agnostic. It adapts naturally to whatever instrument and timeframe you point it at. The buffer that price must clear and the stop that protects the trade both scale with the size of that morning's range. Who is this suited for? Educationally speaking, this is a strategy for traders who appreciate simplicity and structure. It takes at most one trade per day, inside a defined window of hours, and then it stands aside. There's no overtrading, no stacking of positions, no curve fitting to a dozen indicators. It's a disciplined, rules-based approach to a well-known market behavior. Remember, everything we cover here is for educational purposes only, and nothing in this video is financial advice. Our goal is to understand how the logic works, not to promise any particular outcome. Let's walk through exactly how the strategy thinks, step by step. The whole process resets at the start of every new calendar day, so each trading day begins with a clean slate. First comes the waiting phase. Any bars that print before the session start hour are simply ignored. The strategy does nothing until the clock reaches the configured start hour, which by default is 7, the London Open in server time. Next comes the range building phase. Starting from that first bar at or after the session opens, the strategy records the running high and the running low across a set number of bars. By default, that's 4 bars. As each of these bars closes, the EA stretches the range. If a bar prints a new high, the range high moves up. If it prints a new low, the range low moves down. Crucially, no trades are allowed while the range is still forming. The strategy is only measuring, not acting. Once that fixed number of bars has closed, the opening range is locked. Now the strategy enters its hunting phase. It watches for the very first bar that closes decisively beyond the range. To avoid being tricked by a marginal poke, it adds a buffer, calculated as a fraction of the range size. If a bar closes above the range high plus the buffer, the EA signals along. If a bar closes below the range low minus the buffer, the EA signals a short. It takes only one trade per day, and only while the clock is still inside the trading window before the session end hour. Now for risk management, which is where this strategy is rather elegant. When it enters a long, the stop loss is placed just below the opposite side of the range. That is, just under the range low, minus the buffer. The logic is simple. If price breaks out upward but then snaps all the way back through the entire range, the breakout has failed, and the trade is invalidated. For a short, the stop sits just above the range high plus the buffer. The take profit is then set as a fixed multiple of that stop distance. This multiple is the reward ratio, which defaults to 2. So if the structural stop is, say, 30 points away, the target is 60 points away in the direction of the trade. This keeps the reward-to-risk relationship consistent on every single trade, regardless of how wide or narrow that morning's range happened to be. Once the trade is placed, The EA simply lets it ride to either the stop or the target. Let's look at the actual MetaQuotes language code that drives this, just as you'd see it inside MetaEditor. At the top are the input parameters, the dials you can turn. Session Start Hour and Session End Hour define the window in which the strategy operates. Widen or shift them to match a different session. RangeBars sets how many bars build the opening range. A larger number gives a wider, slower range. A smaller number reacts faster. BreakBufferFrac controls how far beyond the range price must close before a trade triggers. Raise it to demand a more convincing breakout. RewardRatio sets the take-profit distance as a multiple of the stop. Lots is your order size, and Magic is the identifier the EA stamps on its own trades. Below the inputs is the core signal logic, which only runs once the opening range is locked. First, the code measures the range, the distance between range high and range low, and then computes the buffer as the BreakBufferFrac times that range. The key condition is this line. If the closed bar's close is greater than the range high plus the buffer, we have a long signal. The entry is taken at the current ask price. The stop loss is set to the range low minus the buffer, the far side of the range. Risk is simply entry minus stop. The take profit is the entry plus the reward ratio times that risk. Finally, the EA sends a buy order with those stop and target levels attached. The short side, which I've left out here for brevity, is a perfect mirror image. It triggers on a close below the range low minus the buffer and flips the stop and target accordingly. Let's bring this to life on the chart. The first few candles you see are the opening range forming just after the session opens. The strategy watches them quietly and marks out two horizontal levels, the range high up top and the range low underneath. That box is the entire reference for the day. Watch what happens next. A strong bullish candle pushes up and closes clearly above the range high, beyond the small buffer. That's the trigger. The strategy signals along, and you see the buy entry marker fire as price breaks out of the top of the range. The stop loss would sit down at the far side, just below the range low, so a complete failure back through the box is the only thing that stops us out. From there, price drives higher, candle after candle, until it reaches the take profit level, set at twice the stop distance. The take profit marker confirms the long trade closing in profit, exactly as the reward ratio intended. Now the chart shows the mirror image. Later, price rolls over and begins falling. It drops back down through the box, and a bearish candle closes decisively below the range low, beyond the buffer on the downside. That's the short trigger. The sell entry marker appears as price breaks out of the bottom of the range. This time the stop loss would sit up above the range high, and the take profit is projected downward at twice that distance. Price continues sliding until it reaches that lower target, and the second take profit marker confirms the short trade reaching its goal. Notice how both trades share the same simple skeleton. Measure the range, wait for a decisive close beyond it, place the stop on the opposite side, and aim for a fixed multiple of risk. That symmetry is the whole strategy in a single picture. Of course, this is an idealized illustration for teaching purposes. Real markets won't always be this clean. And that brings us to the end of our breakdown of the Session Open Drive Breakout. We've seen how it waits for a major session to open, builds a tight opening range from the first few bars, and then trades the first decisive breakout beyond that range, with its stop anchored to the opposite side and its target set at a fixed multiple of risk. It's a clean, disciplined, indicator-free approach to a timeless intraday pattern. As always, everything in this video is for educational purposes only and is not financial advice. If you found this helpful, please give it a like, leave a comment with the strategy you'd like me to analyze next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.